Welcome to my YouTube channel. Tonight we are going to be answering questions that home buyers have pertaining to the home buyers process, the home buying process. So if you have any questions, if you're watching this live, do me a huge favor, drop your questions in the chat, comment, give us a thumbs up. I have some questions that are frequently asked by home buyers about the home buying process, and we will get into it for sure. So my name is Kevin Jefferson, the People's Lender, and I help lend to the people. So the first question that I get from home buyers is, should I reach out to a realtor first or should I reach out to a lender first? And that's a great question. In my opinion, reach out to the lender first, because unless you're paying cash, no lender, no realtor is going to show you any properties unless you are pre-approved. So why? Then that's the question that I get next. Well, why do I have to be pre-approved? Because you don't know what you qualify for. You don't know if you qualify for 100,000. You don't know if you qualify for 500,000. Heck, you really don't know if you qualify at all, right? So that's the biggest thing. How much do I qualify for? What do I qualify for? And those are questions that your realtor is not going to be able to answer. Now, if by chance you do go to a realtor first and you're looking to purchase, typically they're going to refer you to a lender that they've worked with. So that's the biggest question, right? So if you're in the market, you're looking to purchase a home, don't call the listing agent or an agent to show you 123 Main Street if you're not in position to purchase. That's the biggest thing, right? So since we're talking about the home buying process and who to go to first, still have people still have questions to why we need certain documentation. So I'm going to talk about why we need the documentation and then what documentation we need. You're asking someone to lend you, let's say, $350,000, right? Let's say we're doing FHA financing, and that's a minimum requirement of 3.5% down payment from the buyer. That means the mortgage company is bringing 96.5% of the funds in order to close that gap. So on that loan, a buyer is bringing $10,500, which is not a small piece of change, right? However, the lender is bringing the other $293,500. So it's very important as a lender to see if the person that we're going to lend this money to has the ability to pay us, right? Now, I understand there are circumstances. You may be married and your spouse is not on the loan and they have money and you can count that. You want to, you have that on your side as income, right? However, if it's not on paper or we don't see it, we only count the income of the person who is on the application. Only the person who's on the application. That's great that you have a backup, that your husband or your wife or your domestic partner is not on the loan and they make a substantial amount. But when we're looking at the loan paperwork, we're basing it off of the person that we're looking at. So I get it. No, you can't use his or her credit. No, you can't use their income to qualify for more. So when we're basing it off of that or that person's credit or income, that's what we're looking at. So we're going to need, if you're self-employed, we're going to need 1099s if you receive them for the last 2 years. If you don't get 1099s or if you get 1099s, we're going to need to see the 2 most recent years of tax returns, all pages, all schedules. What do I mean by all schedules? If you are applying on a 1040, which is your tax returns, and you're self-employed and you do a Schedule C income worksheet from a tax preparer, That is going to show your profit and loss statement of how much money you made in that year, in those 2 years, right? Actually, it's going to show how much you wrote off and how much you're showing as income. We do not have the ability on a regular traditional loan, FHA, VA, USDA, conventional financing. We don't have the ability to give you credit for $100,000 if that's what you made, but you wrote off 50, right? So we're going to base it off what you show, because you're telling us, hey, I made 100 grand. I had some business expenses. I wrote off $50,000 worth of business expenses. And that means your income is going to show us $50,000. Now we're going to take those 2 years and average them over 24 months to give us an average income, because everything's looked at on a monthly basis. Now, we're also going to require something called a profit and loss statement. It's going to be a year-to-date profit and loss statement, which shows from the beginning of the year till now. So I'll take it for this time. We're going to take it from January to July. And we're going to see what income you've made over the course of that time, as well as what losses have you taken. What I mean by losses, different write-offs, liabilities, expenses, to make sure that your income for this year is the same or higher than the previous 2-year average. If it is not the same or higher than the previous 2-year average, that doesn't mean you're done. That just means we have to go on the conservative side and utilize the income that you're showing you make as of now, right? So as a self-employed buyer, you're also going to need your 2 most recent years. You're going to need 2 most recent months of bank statements. The bank statements that have your deposits in it, as well as the bank statements that show your money to close, your cash to close, your down payment, your closing costs, right? Next, if you're not self-employed, we're going to need your 2 most recent years. 2 most recent years of W-2s. We're going to need your 2 most recent months of bank statements, all pages, even if the pages are blank. We cannot have the account number blacked out or cut out. We need to see that you are whose account it is and what the account numbers are, and make sure everything matches. A lot of people are skeptical of sending those things. We're in a business of lending money to buy houses. We're not trying to take anything from you. I know it's a lot of fraudulent things going on out here, but trust me, we're not here to take any money from you. You know, you're looking to buy a house, and we're investing in you, and we need to see that you have the ability to purchase, right? And just take it this way. I use it with clients all the time. Imagine if I came to you and said I want to borrow $100. You're going to ask me, what's it for? How are you getting it back? And when are you getting it back? And essentially, that's the same thing we're asking. We know what it's for. It was for a house. Now we want to know how you have the ability to pay it back to us, and when will you get it back to us? Are you going to give it back to us in a 30-year note? Is it going to be 15? Is it going to be 20? So it's the same thing, except we're asking for $100. You guys are asking for $200,000, $300,000, $400,000, $500,000. If you're just joining us live, I'm answering questions about the home buying process, home ownership, whether you're in the process, looking to start the process, you're nervous to start the process, and you have that burning question of how do I get it done, or you're just here to listen and ask them, listen to see what other people's questions are. That's fine. The goal The goal is to answer your questions. I have a few questions that were asked of me, and then I have some frequently asked questions. Um, some frequently asked questions that people have asked me over the course of time. So again, if you're looking to buy a house, we need 30 days of most recent pay stubs, 2 months of most recent bank statements, the most recent 2-year W-2s for all jobs, whether you're there now or not. Um, the same thing if you're a 1099 employee. If you're self-employed, we need the most 2 recent years of tax returns, all pages, all schedules. We need a copy of a valid driver's license and a second form of government ID, whether that is a social security card or if it's a passport. If you're just joining it live, do me a huge favor, give me a thumbs up, let me know you like it, as well as let me know, hit the notification button so you can subscribe. Barbara Isles has a question. She asked if interest rates have went down. No, they have not. Interest rates have not gone down. And let me share a story with you. Let me share some insight. A lot of people on the sideline waiting for interest rates to go down. I get it. I understand it. We want to make sure that we're getting the best deal possible, right? Some cases for people, if rates go down, that will potentially allow for them to qualify for more and then be able to get the house that they want. The caveat to that is if interest rates go down substantially, you have more people that are going to be in the market. So then you're going to be in bidding wars and there's going to be higher competition, more competition. So you may be able to qualify for more house and your payment may be where you want it to be because rates went down, but you're going to have more competition because there's more people on the sideline who got off the sideline because interest rates went down because either they feel more comfortable with the payment or the rates have gone down because that's what they're looking for. So just to let you know, when interest rates are up, there's less competition. When they drop, there's more competition. But Barbara, they have not gone down. When they will go down, we don't know. But I do advise you, if you're looking to buy, there's a lot of different opportunities out here to potentially get your payment a little lower, at least until interest rates go down. Hopefully that answered your question. So something big that happened this week that's going to play a huge part in home ownership, inflation. The Supreme Court shot down President Biden's bid to forgive student loan debt. There's $1.8 trillion in student loan debt. There are the average person has $44,000 in student loan debt, which is significant. So the government forbearance that's been happening since March of 2020 has been lifted. And as of October the 1st, people will begin making those payments back. The average person will be paying back around $300 a month, which now for 3 years, you haven't been paying the $300 a month. So now you're going to have to weave that into your monthly budget along with inflation increasing. That's going to have a huge part on people. What I will tell you to do is do not ignore the signs. Please reach out to your student loan servicer and get on some sort of payment plan, preferably an income-based repayment plan. An income-based repayment plan is the most flexible payment plan when it comes to loan options because all loan types will take an income-based repayment plan, better known as an IBR, right? Get on it. If it's 0%, if it's $0, you're not going to be able to use that payment arrangement for FHA, VA, or USDA. You can use it for Fannie Mae for conventional financing, but then you also have to have the strong credit score, the income, the debt to income ratio, and the financials to qualify using that zero payment. So student loans is going to be big. It is very big for people. Do not ignore your student loan servicer reaching out to you, telling you that you need to start paying back your payment and need to get on some payment arrangement. The other thing is, if you have 10 student loans on your student loan, I would look at consolidating. If you have more than one student loan, I would look into consolidating, because let's say you have a mistake and you forget to make a payment. Instead, even though it's one student loan, instead of it being one late, it's going to be 10, and it's going to trash your credit. It's going to trash your credit. Do not ignore your student loan servicer. The government forbearance has been lifted, and unless something changes by October the 1st, people will have to start making payments back. Jarlistica, it says, is it a good time to start a new construction home or look for existing? So right now, new construction subdivisions are offering a lot of great incentives. You know, depending on what part of the country you're in, depending on where you are in terms of location and price point, builders are offering 10, 15, parts of Atlanta, Georgia, they're offering $20,000 for closing cost assistance. Let me preface that though, right? They're offering it for closing costs and to buy down the rate, which is great. They're not going to give you down payment assistance and give you incentives. So so you have to have some money in the game. Like, most people are coming and wanting to do new construction. The builder's offering $15,000 in incentive for closing costs. However, the buyer's like, hey, I want to see if I can use down payment assistance. Ain't happening, Captain. Because the lender and the builder have already given you funds, right? And the lender typically does not get compensated the same on a new construction sale, because they're giving you a lender's credit. And then on top of that, they don't get compensated the same for down payment assistance. So nobody is in business to lose money. Or not to make money. So that's why if you go to a new construction site and you're trying to use down payment assistance and get the incentives, it's going to be tough. They're not going to do it. But to answer your question, get pre-approved and look and see what's available. New construction has great incentives. Existing houses, sellers may be able to pay some closing costs so they can move on. It just all depends. But new construction isn't a bad option. Good evening. Can someone mail or fax you their information? It's easier to fax. You can fax it to 404-600-1683. It comes directly to me. It's a secured e-fax, so no one else will see it but me or my team. But you can fax it. I wouldn't mail it. So Barbara, you're looking at a 750 to 790 credit score. That's great. You should be able to get some good terms. And depending on how long you have had credit established, that should or could potentially allow for you to qualify for conventional financing. It says, I've been paying my student loans through the pause. I'm down to 593. When you say you're down to 593, Michelle, what do you mean? No problem, Patrick. Hey guys, if you are just joining the live or you're watching the replay, hit the subscription button. You'll get notified as to when I go live. If you're watching the replay and you have questions, drop them down below in the comments. I will do my best to answer them. I do check the comments periodically through the week, and I answer and respond to questions. If you're watching it live and you have a question pertaining to home ownership, drop it. I'll answer it. If it's confidential and you don't want to go too deep, you can reach out to me. The link will be below. You can schedule a call, and you can also email me at teamjefferson@summitfunding.net. So if your question is a little bit lengthy or personal and you don't want to put it in front of everybody, schedule a call and we'll get on a call and I'll answer your questions for you. Oh, great, Michelle. $593. That's awesome. That's awesome. Awesome, awesome, awesome. So to answer some more questions that I typically get, I'm looking to buy a house, and I want to know my options as to what down payment assistance program I qualify for. So how you get qualified for a down payment assistance program, you apply. So the only way we know if you qualify is if you do a full application, as well as supply all your documents. And when my team and I look at your information, we're going to look to see everything that is available to you, whether you qualify for FHA, conventional, VA, USDA, a bank statement loan, state down payment assistance, or national down payment assistance. That's the best way to find out. Wondering, asking a ton of questions, or trying to figure out the best way for my team and I, or any lender, to be able to tell you what or how to get to that point is you just applying, and then we can give you a game plan, right? Which goes to my next question. Hey, I know my credit's not good. How do I get in position to qualify? Again, schedule a call. Let's talk through it, and I can give you some pointers. Go ahead. I would say apply, get a game plan. If your credit score is not there, then fine. Credit score is not there, then fine. We can potentially give you a game plan. I always tell clients, if my team and I can figure it out, we'll give you information. If it's above my pay grade, which means it's a little bit beyond, what I know to do with credit, I refer you to a credit repair company that I've utilized over the years. All of my clients who have had success with this credit repair company has followed the game plan. The ones who don't follow the game plan don't have the success. So credit repair is not a magic pill. And it also is not free. It's an investment. It's an investment. Credit, the right credit repair company can help you get your credit to where it needs to be. And you will see so many different things that will help. It helps with your homeowner's insurance. It could potentially help you in terms of getting a job, because if they pull credit, it helps you qualify for different programs in terms of, home buying. There are just so many different things that it can help you with. So definitely want to make sure you stay on top of your credit, right? Tell them, Kanisha, please get pre-approved, then look at homes, because you're going to find yourself in a bind. So if you're looking at homes that you want and they're $500,000 and you qualify for $250,000, that's a huge gap, right? Something else. So a lot of people are coming to me to shop around, which is fine, right? I get it. You're trying to get the best deal. However, you want to make sure that you're comparing apples to apples and oranges to oranges. Meaning, if you get pre-approved with a mortgage company and you have not given them any documentation, you're just going off of them pulling your credit and you filling out the application and telling them what you make, that is not a solid pre-approval. because you may have overtime, bonuses, you may have not worked your full time because you were out sick and you just came back, and that may, you may not be able to use that income. I've had people who have had pre-approvals from other lenders who did not do a thorough job in qualifying them. They got under contract, and then they end up coming back to me because the person actually could not do the deal. So when you're getting pre-approved, two things that buyers are looking at. They're looking at what's the interest rate and how much do I have to bring out of pocket, right? And that's great. You want to know what's it going to cost you to do the loan. However, if you talk to three lenders and one lender's number looks far cheaper than the others, I would vet that person, because you're moving to the same place. So the taxes and insurance should be somewhere around each other. It's all a guess in the beginning, right? Because we don't know what property you have. However, there are lenders who will give you a pre-approval or pre-qualification with low numbers to win your business and then pull the banana out the tailpipe once you're under contract. Because once you're under contract, the clock starts ticking. You now have money invested, and now you have to make things happen, right? So don't look at all three lenders. Of course, see what they're offering, and then ask questions. Okay, why is your rate so low? I hear a lot of lenders and realtors saying, hey, go at the check out the rate, but sometimes these lenders are giving false rates. If two people are offering you 6.5% and one person's offering you 5%, you need to see where it is. They're probably charging you discount points, or they're just giving you that information to try to keep you as a deal and then continue to take you through the process. And then all of a sudden, when you need to and you're under the crunch, they then say, hey, I'm sorry, interest rates went up. It cost us a little bit more than we thought. And then you're kind of stuck. So when you're comparing, don't just compare the lowest price. Make sure you're comparing the apples to apples, oranges to oranges, and see why they're so much lower than everybody else. What happens if you sell your car right before buying your first home? The car is the only debt and only long-term debt. I'm sure will cause the credit score to drop a little temporarily. So if you sell your car right before you close on a home or before you buy a home, you want to make sure you get an invoice so we can track the sale of the car and make sure you deposit those funds into your account. Because if those are the funds you're going to use to qualify or to have for your down payment or closing costs, and it's not your normal pay, we're going to need to verify where those funds came from. In terms of it dropping your credit score, depending upon when you sell it, we may not see that score. It could possibly drop it some, but it just all depends on the timing. But that's a great question. That's a great question. In today's market, do you think it's possible to get approved for up to $450 with a single household income of $8,000 a month and total monthly debt? No doubt. No doubt. No doubt. That's a great income. That's a great income. That's almost $100,000 a year, and you have low debt. So that is definitely doable. You can probably get $450,000. Actually, it doesn't matter. I don't think it matters what part of the country you're in, except for maybe Jersey or New York, where the taxes are super, super high. Is there any benefit to having a realtor when buying a new construction home? Bingo. Best question of the night. Yes, there is a benefit to having a realtor. When you go to the builder and you don't have a realtor, the the person on site represents the seller, who is the builder. So yes, they'll help you through the process, but they don't represent you. So if anything ever happened and you guys had to go to court, you won't have had any representation, right? The other benefit is you're going to have someone representing you and you don't have to pay them. You don't have to pay the realtor. So typically when you have a buyer's agent, as long as you go to the new construction site and says XYZ is my realtor and you sign on the paper and you take that realtor with you, that builder is the new construction site is going to pay that realtor compensation for representing you. So why not get free representation? And another thing, going to the new construction site without a realtor and then them not paying the realtor isn't going to save you any money. So you might as well go and be represented and have someone who knows what they're doing, unless you are a realtor. Kim Tober, if we have applied and are gathering required documents, how long do we have before another hard pull is required? Typically 120 days. So that's where it goes back to making sure you have those documents in place. So in any situation, a credit report is good for 120 days. After 120 days, the credit is going to be repulled. So even let's say you turn your documents in, you're pre-approved, and you don't find a house for 120 days, it's going to have to be repulled. Hey guys, listen. When hard inquiries, people have a misconception of hard inquiries. When it comes to purchasing a house, the hard inquiries may be one or two, maybe three. Let's say you went to three lenders. Let's go three. If you went to three lenders pulled your credit within a 30 to 45 day window. It's going to be three inquiries, but it is going to only pull down your credit one time. See, what you guys are getting mixed up is potentially listening to people talk about having too many inquiries on your credit and nobody lending you funds. That's when you're trying to get financing for personal loans or for business funding and stuff like that. When it comes to home ownership, I've seen people who've had 15 inquiries on their credit because they apply for cars. As long as you qualify and you have the score, we don't look at the inquiries. We ask you to explain them to make sure you didn't take on 15 new pieces of debt that's not showing on your credit. But for the most part, the inquiries, it affects your score 0 to 5 points over time. Again, if you don't have the score, then it's not hurting your credit. If you have the score and you have an inquiry, that's the only way we're going to be able to tell what you can qualify for. But yeah, 120 days is what the 120 days is what the credit report is good for. Let's see. See if I missed something. My credit history has been good over the last 5 to 8 years. I do need to get pre-approved. Home prices in Florida is expensive no matter where you buy outside of Orlando or in Orlando. So hey guys, Miss Barbara, that's great as far as your credit. Let me give you some other questions, right? If you are a remote worker and you have the ability to move to a different state, keep your same job, your same income, and still work, but be able to buy a house, that's another option. I have people who call me from California, New York, New Jersey, Colorado, all over the country to move to different states where they can now afford. In some places, they're outpriced, but they want home ownership, so they're willing to move to a different state in order to acquire a home and achieve their dream of home ownership. be flexible. Be flexible. I know we like convenience and where we live, but if you really want to be a homeowner, um, I would say be flexible or figure out with your lender a game plan on how it allows for you to qualify for a little bit more home. Again, guys, if you are joining this live, do me a huge favor. Give us a thumbs up. It helps with the little YouTube algorithm. If you are watching the replay and you have questions, drop them in the comments below. I'll definitely answer it. We'll definitely reach out. We'll answer the questions. If you want to set up a consultation with me, this is my shameless plug. I have the ability to help you in 46 states. My team and I can help you in 46 states. So if you would like to schedule a consultation to see how much you can get approved for, or to see what, if you need a game plan, reach out to me and my team. The links are going to be below. The email is teamjefferson@summitfunding.net, as well as the Calendly link to set up an actual appointment. So guys, listen, I definitely appreciate you reaching out to me. I do want to explain something, right? And I'm saying this out of love. When a buyer reaches out, when you reach out to me for a consultation, it's typically going to take between 48 to 72 hours for us to vet you. We're pulling credit, and we're looking at all of your documents. We have to look at every line of the bank statement. We have to calculate income, and sometimes those things aren't easy, right? I know it can be frustrating and you want to know. However, everybody's situation is different and it's not always easy. Again, we're vetting you to make sure we're partnering with the right person to lend them hundreds of thousands of dollars. Typically, Saturdays and Sundays and holidays don't count into that 72 hours, right? I'm asking for some grace. Trust me, I have a high rate of closing people when I issue a pre-approval. A very, very high rate. It's because I take my time and I get all of the information up front. I try to get as much as we can up front. Again, if we ask you for all of your information, the 72 hours starts when we get that last bit of information we get. That's when it starts, because we can't if you piecemeal us the pay stubs, and then the next day the bank statements and tax returns, and then the next day the W-2s, we're going to keep jumping in and out of your file, and we can't do anything until we see a clear picture, right? So I've had some people reach out, not do the application, but submit documents. When you get the email, it is at the top where it says, please apply at www.kevin-mortgage.com. That's where you apply for the application. And then underneath of it, it has very specific instructions on what documents we need and how to get those documents. If we can't get those documents in that order, it's going to affect your ability to get pre-approved. I can't have, and I got it again the other day. Somebody sent me their social security card with their thumbs in the picture. I can't submit that to underwriting. So like I'm asking for specific information in a very specific way so that it makes it faster for you to get pre-approved. And just do a favor, just submit everything at one time. If you don't have something and you're waiting on it, I would just wait until you get it if you don't want to wait. You see what I'm saying? Like if your problem is waiting to get an answer because you said that Rocket Mortgage has given you pre-approval and I ask you for those documents, they're supposed to ask you for the same documents. Every lender is supposed to ask for the same documents. So if you apply with two lenders before you come to me and I ask you for a document they missed that document, because we all need the same documents. Right. And I say that out of love because it allows for me and my team to do the best possible job for you guys in pre-approving you if we have everything on time. Sometimes you've done your job and we get backed up. I apologize if it takes a little longer, but trust me, we're working on it. I just want to say that in advance. But again, I definitely appreciate you guys jumping on here and asking questions, and we'll jump back into it. What's the minimum required income I need to purchase a home in Georgia? I'm retired and only have an annual income, which is very little, around $2,300. Would I need another job? $23,000. Miss Nubian G, it all depends upon what part of Georgia you're looking to move to. It all depends upon what type of debt you have. So, guys, that's a great question, right? When we look at we look at what comes in on a monthly basis and what goes out on a monthly basis. I've been able to help people who made $25,000 a year purchase a home. I've not been able to help some people who make $125,000 a year. Why? Because their debts are too high, even though they have 5 times the amount of the income of the person that I just said, right? So what we look at is what you have coming in on a monthly basis and what goes out on a monthly basis. Now, Miss Nubian, in order to figure that out, we would need to see what you're looking to do, and we could also have options. We have options where you could apply for an FHA loan, 3.5% down payment, and let's say you want to do a multifamily home, you have the ability to use the income from that unit to help you qualify for more. If you do get another job, that's possible, but the only way to really tell you is to take a look at your income and your debts, and then we can determine how we can help you. What are some of the common conditions underwriters ask for? Antonio, you the man, brother. So underwriters are going to look at the guidelines that the program you have you're looking into, right? If it's FHA, they're going to look at FHA guidelines. One of the biggest things that hinders people is the 2-year work history. It has to be a 2-year work history, not necessarily the same job. So it could be 24, it has to be 24 months. That's why I'll refer to it as 24 months, because if you had a gap in your work history, we need to go back for a 24-month history. That's one of the biggest things underwriters look for. The other thing underwriters look for is large deposits or deposits in your account that are not your normal pay or bonuses, right? That's going to draw a red flag. And it's not necessarily a bad thing. It's just having to make sure where the funds came from and notating it and getting a letter of explanation. Like the young lady earlier asked for when she sold her car. Let's say she sold her car and got $10,000 for it and she deposited in her account. That's why I told her to get the invoice so we can document it for her. If you currently, and I've had this, if you currently have a job and then you also do hair or barber on the side, I would suggest to you right now to get a separate account to put those funds into. Because if you can't use that income, or you get it on Cash App or Venmo or PayPal, it's going to be hard to trace all of those small deposits. So I would say just have a separate account for that money to go into. If you're cutting hair and you get cash, I would take that cash and I would use that cash to pay for my gas or my lunch or whatever. That way you can keep your normal pay in the account, and that's the easiest way not to have to document additional income. What else do underwriters look at? They want to make sure it makes sense. Example, if you're looking to buy a house, and let's say you're in Florida, but you work in Florida and you want to move to Georgia, has to make sense, the distance in between, right? Underwriters also want to make sure that we're looking at your debts properly. what comes in on a monthly basis, what goes out on a monthly basis. If it gets that far in terms of, let's say, child support, we look at child support, it has to have a likelihood to continue for 3 years. So if someone made a mistake and your kid is 14 and they turn 15 while we're in the process, you no longer have 3-4 years to continue using that income to help you qualify for. Well, aside from the bank statements, job history, verification of employment is huge. And what income to use. That's probably the biggest. Outside of bank statements, that's probably the biggest. There's a lot of people who work. So what you hear a loan officer refer to VOE, verification of employment. We're going to get your pay stubs and your W-2s to verify what you make, right? However, we're going to reach out to your employer and get a verification of income to make sure that you're still at the job and how much you make. So example, there are people who work 40 hours a week, but they're only really guaranteed 36 or 32. And if that's the case, we have to figure out or make an argument as to why we should use the income of 40 hours a month. 40 hours a week income on your hourly rate. If you're salaried, that's easier. But the verification of employment, a lot of times the verification of employment helps us be able to see if you have a 2-year history of receiving bonuses, commissions, or overtime. If you're in the nursing field or some type of field where you get shift differential, like all of those things matter. So a great loan officer looks for that up front. And I'm going to tell you now, I look for that up front because if there's anything that can kill a deal, and that's income. We can always figure out how, or you could potentially get a gift to get more money or pull more out of 401k or save a little bit more, but we can't help you create more money an hour or a month if the employer is not giving it to you. So that's a great question. Let me see. Patrick, if you have 3 different banks, do you need all bank information or just one? So when we look at bank accounts, we are looking for where your direct deposit goes in and your cash for closing. So if those are in 2 separate accounts, we need 2 separate accounts. We definitely need where the direct deposits go, and then we need the funds of closing. If you have a separate account and it's for discretionary funds and it's not needed for closing, then we don't need that account unless you're transferring money back and forth for between the 3 accounts or between 2 of the accounts. Then the underwriter is going to ask where those funds came from. So upfront, no, but depending upon how you move money around, it's a possibility we can ask for all. Let's go to another question. It says, okay. I would say let's get on a game plan to get your credit and let's see why the scores are not so favorable. Sometimes it's because you don't use your credit, and sometimes it's because you use too much of your credit. But I would say definitely get on a consultation to see how we can help increase your credit score. I see my girl Kanisha here answering some of the questions. I appreciate you. Random user. Do buyers have to ask specifically to have a clause in their contract they'd return their deposit in the event of job loss, or are there other state laws that cover that? So when you write up an offer, there's going to be some contingency clause, right? Depending on where you're at. There's typically going to be something called a financing contingency, and then there's going to be appraisal contingency, then there's due diligence, right? But during the process, if you lose your job, then the lender, and you don't have a job coming up or don't automatically have a job, then the lender's going to deny you because you don't have income. You don't have the income to qualify or the income that we were using to qualify. So there is potentially a way to get your funds back. But hopefully, no one's anticipating applying for a mortgage and then anticipating to lose a job. But you have rights to be covered on your deposit in those contracts. It varies from state to state. Um, but the biggest thing is if you're applying for a mortgage and it happened during the pandemic where people lost their job or got furloughed, we had to give denial letters because they didn't have the money to get financing, and they got their deposit back. Typically got their deposit back. I don't remember anybody who lost their deposit, um, but yeah, it's going to vary from state to state. If one spouse has the 2 year job requirement, but the other spouse doesn't, but has a job, do lenders not use the spouse with less than 2 years? So, man, Miss Johnson, it's going to depend. If the spouse has a 2 year history, so let's say someone works at Verizon and they've only been there for 6 months. Do they have 18 additional months of work history somewhere else? That's what we're going to piece together. It doesn't have to be 2 years on the same job. It just has to be 2 years or 24 months combined, right? So if there's 6 months at Verizon and then they had an additional 18 months at AT&T, then that's their 24-month work history. But we're going to use the income that they get from Verizon to qualify them. Hopefully that answers your question. So if there's been a job gap, we just go further back. So example, you're at Verizon for 6 months. You had a 3 month work gap between Verizon and AT&T, and let's say you were only at AT&T for 12 months. Then the job before AT&T we're going to look at. So the goal is to find 24 months of work history. 24 months of work history doesn't have to be within the last 24 months. Even if there's gaps in between the jobs, we just need to put together 24-month work history to show that that person has worked. 3 year gap. I would say jump on a call with me. Jump on a call and we can go further. But to answer that question here, depending on the financing, they may be required to have 6 months to a year on another job in order to show job stability. So we can even do it with a 3 month gap. I've seen women who worked and had a 5 year gap because they wanted to stay home and take care of their child. And then when they got into school, they decided to go back into the workforce. We just have to get some additional time on a job, showing consistency, and we're good. So that is, it's doable. It's definitely doable. You just have to have time on a new job and consistency, and that's all we're looking for. Hopefully that answers your question. But if you want to go a little bit more further, reach out and grab a call with me, and then I can explain. It says if credit and DTI are good, does elect? It depends on your circumstances. So the three important keys to DU or desktop underwriting, it's going to pick up all the data. It's going to look at credit score, debt to income ratio, and money. I refer to as assets. So if you ever hear me talking and I'm referring to assets, I'm talking about how much money do you have, whether it's in checking and savings, retirement, 401k, 403b. I'm going to talk to assets. I'm talking about money. If you have a low credit score, but you've got good debt to income ratio and assets, that's likely that you could get approved. If you have a good credit score and money and high DTI, it's possible that we can get you approved, right? So what I'm saying is typically you need to have 2 out of the 3 to be strong in order to compensate for the one that's not strong. Now, if all 3 are lacking, then it's going to be hard to get desktop underwriting approval. But there is something called manual underwrite, which means it's not a desktop approval. Your guidelines, your debt to income ratio is typically cut a little bit. But if you can provide or meet their manual underwriting guidelines, you could potentially be approved. What the manual underwriting guidelines are, kind of in a nutshell, we want to see if you have a 12-month work history. A 12-month rental history, because your rent is going to be the largest payment you have outside of a mortgage. So it's going to be pretty comparable. So we're going to look at, does this person have any lates in the last 12 months on their rent? How do we determine that? We get a verification of rent from your landlord or property management company. The other 2 trade lines would need to be something that you have not had a 30-day late on that you pay on. Utilities, cell phone bill, car insurance, something like that. And we need a 12-month history on that in order to provide the underwriter with 3 trade lines with 12-month histories showing that you make payments. Yes, your debt to income ratio is kind of capped a little bit based off of that. And then the other key factor is they want to see reserves. Because it's a manual underwrite, they want to make sure that after you bring your down payment and closing costs, that you have some money available or left over in case you get into a jam. But if you don't get desktop approval, you could potentially do a manual underwrite. I know a lot of lenders who won't do the manual underwrites because it's a little bit more work, but we do them all day. Hopefully that answers your question. I found a property that would have been perfect and was ready to put an offer in. I ran into FHA 90-day flip rule. Can you explain that a little bit better? Yep. So back in early 2000s, FHA did not have a 91-day flip rule. And what happened was they put that in play because so many people were buying properties, fixing them up, and then selling them right away. Sometimes they were fictitious just to get additional funds from FHA. So FHA put that in as a precautionary measure. So what does that mean? That means that on an FHA loan, if I buy a property today and I rehab it, I cannot have a contract on that property until after I've had ownership on that property for 91 days. On that 91st day, then a contract can come in and get FHA financing. If it's conventional, USDA or VA, they don't have that rule. But on FHA, if the owner has owned the property less than 91 days, FHA will not lend on it so the contract cannot be written until the 91st day. Meaning, if I purchased a property and my 91st day was today, then we could write a contract. If my 90th day is today, you can't write a contract till tomorrow. Hopefully that makes sense. And they do that as a precautionary because they got hit with it during the Great Recession, 2008. Miss Nayday, depending on where you're at, I may be able to help you though. So reach out to me and let me know if you want another solution. Jasmine H, can you explain open-end mortgages as it pertains to funding for additional homes? Do you all offer open-end mortgages? Open-end mortgage. Open-end mortgage. I don't have a lot of information on it. I'm not going to sit here and lie. What I do know is it's typically done like on a small bank level. Um, Not many people do them. Um, I can't really answer it. We may do it and I could help you. I'd be willing to see if we do it. And if we do it, walk you through it. But I'm not an expert in it. So I wouldn't even really, I'm not good enough at explaining it in order to give you the information you need. If you want to do a one-on-one and I can find out, I can definitely help you that way. But I don't know a whole lot at this point. But since you asked, I'll research it. Great questions, guy. Great questions. Great questions. We can help in Illinois. Um, if you're talking about do we have the ability to do construction to perm in Illinois, yes, we can do USDA, VA, and conventional. If you're looking to buy new construction property that's already up, can we provide a loan for that, like FHA, USDA, VA? We can do that as well, as long as the builder is willing to work with the outside lender. Thank you, Cynthia. I think it's Cynthia or Cynthia. I'm sorry, Miss Johnson, if I'm pronouncing your name wrong. No problem. You guys' questions are great. It helps me with the live. A VA build. Yep, we can help you with that. We can help you with the VA build. Set an appointment or reach out at Team Jefferson at summitfunding.net to set an appointment, and then I can send you the actual link to apply. There are some additional instructions, so send the email saying you want to get on with me, and then I'll send you the link and the instructions we need specific to your needs. Thank you, Ms. Jones. Let me see. Is my FICO worth the money to know your actual scores? That's a good question. I don't pay for it. But if you want to know what your scores are, you either can go to my FICO. You can either go to my FICO and you can go to my FICO and see, because my FICO doesn't have a free trial. Or you can just apply with a lender and see what your scores are. But whether it's worth it, I can't say. I don't know. I don't pay for it. There's a site that does have a dollar trial for 7 days, and it gives you 9 FICO scores. I want to say it's FICO 9. I think it may be FICO 9. But if not, just apply with a lender and see what your scores are, what your mortgage score is, and then you can go from there. Shanitha, thank you. I think I said it right that time. Hey guys, if you are watching this live and you're enjoying it and you have questions, do me a huge favor. Give me a thumbs up, subscribe to hit that notification button. I'm going to tell you now, I'm going live Thursday. Thursday's live to me it's going to be special, because what we're running into is we're running into people who can't afford to purchase a home with their income, and they have family that can't afford to purchase a home with their income. So I'm starting to see generational home purchases. The grandparents, the parents, and the kids. So it would be my mom, my wife, and I, and my kids. I've also seen a mother and 2 sons purchase, because what happened was they're each paying about $1,500 a month in rent. That's $4,500 a month that they're paying out, and they're not always home. Or when they're home, they're together on the weekends. So they said the only way that we think we can purchase a home is for us to come in together and buy a home big enough for us. And with a $4,500 a month payment, if you can afford it, that'll get you a decent house. That's a no for you. Different strokes for different folks, you know what I mean? But some people, they don't know, you know what I mean? Like that's the only way they're going to be able to purchase. Everybody has a different situation, but it is an opportunity, and I'll walk you through what that process looks like, how you can do it, if it's even an option. I've had some parents help their kids purchase homes, and then they've later refinanced the parent off once they've got some of their debt down, or they now have enough equity to where the payment can be lower. So it's so many different ways to utilize that if you're in a position. Thanks, Miss Nubian. So if you're on this live, thank you for joining. I appreciate you guys' questions. If you're watching the replay and you have a question, drop it in the comments below. Do me a huge favor, guys. I am pushing for 4,000 hours on YouTube. 4,000 hours. We're close. We're close. I appreciate your time. I appreciate you support me. I appreciate the likes and the subscribes. Do me a huge favor. Do your boy a favor. Watch a video all the way through, or just play the video. I need those 4,000 hours. I need those 4,000 hours, guys. When you see me go live, jump on the live and ask your questions. Hey, guys, even if you aren't working with me and you've got a question, I can answer it to the best of my ability. Some lenders have specific guidelines that they go by depending on their program, but I'll do my best to answer that question. If you know anybody that's looking to purchase a home, have them subscribe to my channel, go back through my catalog of videos. I've answered a ton of questions. There's enough information on my page to where someone can go from A to Z and purchase a home, or repair their credit from A to Z, or get them in a position to purchase a home. They'll learn how to save money. They'll learn how to budget. That you guys have asked amazing questions. I've gave some information. I've answered those questions. There's somebody in your situation and they didn't know it. Refer them to this channel. If you have family members who don't think they can purchase a home and they need some great information, have them reach out to me. So have them subscribe to my channel. My goal is to go live every week. It's been sporadic because it's because it's the summer. But if you hit that notification and look at my community tab, it's going to tell you when I'm going live. Awesome. Thank you, Nubian G. Shahida Hill. Thank you. Let me see. Miss Jones says she'll play in the background. Musical Soul 2005. Are there any loans for teachers that can help with down payment and closing costs? Yes. There are some loans available that help teachers pay for down payment. And then there's some that could potentially pay with closing costs. Depends on where you're located. But to answer your question, that's a yes. There are some things that can help teachers qualify. Help teachers pay for down payment and or closing costs. Just depends on where you're at. Thanks, Michelle. So, hey guys, listen. For listening to my live, I offer a home buyer's guide. The home buyer's guide is free. The link is going to be below. You just need to put in your name and email address. Now, for that, me getting your email address, I send out a newsletter once a week. The newsletter is typically going to be pertaining to us going live and when we're going live, or it's going to be pertaining to something dealing with home ownership, some type of change. We don't sell you information. We don't spam you. But that home buyer's guide is something that you can help utilize when you're going through the home buyer's process. It's some valuable information. So if you want to be a part of my newsletter, subscribe to that you get a free home buyer's guide. The other thing is I have a Facebook group. I'm going to start going live in the Facebook group separate from this, and this goes live in the Facebook group. Join my Facebook group. There's questions that are being asked, questions are being answered. I'm starting to get past clients who are going to be a part of it and can tell you the experience and the journey. And my goal out of this is to build a community, to help the community and make sure that, we are creating more homeowners. The purpose for that is these venture capitalist companies are buying up thousands and thousands of homes, of single family homes. So my advice to you is to try to get in now before they start creating more and more funds to where they buy more homes and, turn the United States into a renter's nation. They have cash and they don't plan on selling because a rental is single family home is an investment. And if you have renters and people are always going to need somewhere to live, and there's a housing shortage in the United States, they're just going to continue to keep buying. Does that push out the little guy? Potentially. It does potentially push out the little guy, but at the same time, if you prepare yourself now for home ownership, you will definitely reap the rewards. With that being said, guys, I'm going to wrap it up. Thanks for joining. Again, hit the subscribe button. Do me a favor, watch one additional video. If you can watch one additional video. If you're joining this in the middle of the live, go back to the beginning of the video and listen to it. There were some great questions answered, and potentially look at another video pertaining to a topic. If you have student loans, I would listen to last week's videos about student loans. Again, I'm Kevin Jefferson, the People's Lender. If you want to reach out to me, my contact information will be below. Have a great weekend.